So how does the IRS select someone for audit? Well, the audit selection process has always been a mystery. It's like the algorithm at the IRS that nobody knows about, and it's often talked about. But it's actually fairly simple, and most of the IRS audit selection process is being replaced by artificial intelligence. That's going to do what used to take the IRS thousands of audits to create data. Artificial intelligence is going to replace that by looking at that data and then going ahead and be able to best select returns for audits. The IRS is in its infancy stages there, but they're starting to use AI to go ahead and do better audit selection. The IRS actually wants to select returns that have the most likelihood for an adjustment. And they actually do a pretty good job of it. About 90% of all returns that the IRS selects for audit actually results in a change. So how does the IRS do that? Well, again, AI is one of the things they're starting to experiment with, but the IRS does produce a probability score that there is an error on a return using their old system called the discriminant function, or DIF system in there. This gives a computer score basically showing the highest probability. Now that selects the return, that kicks it out. There are other individuals at the IRS who actually go look at that return and send it off for audit. So that's a selection process. But there's other ways that the IRS selects returns for audit. The IRS could have special projects going on. For example, they may like to look at S corporations that have no officer compensation because they know there's going to be a reasonable compensation issue. Or they may look at people who are deducting business losses for things that look like hobbies, right? The hobby loss issue. Or they may like specific industries, like the IRS always likes to audit the construction industry. High audit rates on there because the IRS knows it results usually in a high change rate. So the construction industry could be another project out there. But there are also other areas that the IRS knows that they need to go audit. The most common audit issue is the earned income tax credit. Why? The IRS needs to go ahead and stop the improper payment rate related to refundable credits, one of which is the earned income tax credit. So that's actually the number one audit issue. And mail audits are the number one way that the IRS goes ahead and does that. Right? Most IRS audits, 68% of all IRS individual audits are actually done on taxpayers who owe less than $50,000 according to the 2024 IRS audit statistics. That usually is targeting the earned income tax credit. So the IRS may specifically go after that issue. So how do you know that you're selected for an audit? Well, you actually can look at your IRS transcript, your account transcript, and if on that transcript it has a transaction code 420 or 424, you've been selected for an audit. Does that mean an audit actually will occur? No, it doesn't. In order for the audit to actually start, you will receive a letter from the IRS. Now, a mail audit letter will be different from an office or field audit, but you could read the letter and you'll understand exactly what type of audit is going on. So if it's a mail audit, your job there is to respond back to the IRS in time. If it's an office or a field audit, one of those face-to-face audits, you'll get in contact with your auditor. For an office audit, it's a tax compliance officer. For a field audit, it's a revenue agent. You'll make contact with them and start that audit process with them, which is likely going to last over a year in those face-to-face audit situations. So remember, the IRS likes to audit taxpayers that have a high probability for change on the return. That usually means that there is unreported income that they know about. There is a specific issue that they're targeting, that they've had a lot of change in the past. Could be the earned income tax credit where they start fraud out there, or it could be just a general score that the IRS puts on there based upon the number of items that are out there that they go ahead and select for audit.